Well, hello everybody. So this is the second episode then that Nicholas and I are doing that complements our book about holding crypto assets on trusts and foundations. So it's going to be an easy one today because Nicholas is himself the expert that we're going to talk to today because it's the subject of Austria, of course, where Nicholas is trained and based in Vienna. So I've got a few questions, Nicholas, but I'll let you say a few words to introduce the topic.
Yeah, thank you very much, Ross, for the introduction. Great to do this series together. And fortunately, indeed, Austria is it starts off the book, the first chapter. And yeah, I think this was a great project that we did together, and we're now trying to make the book more known to the public at large. It's quite a comprehensive overview of the most important foundation and trust jurisdictions. So for those who have not seen it, this is how it looks like. And in the next few weeks, we're basically going to go through all of the countries and give a quick overview of the content of the book, which does not mean that listeners should not be buying the book, but it's maybe just a kind of teaser so to get to whet people's appetites.
Excellent, great. So yeah, so Austria, I have always seen it as a bit of a structuring jurisdiction. So I
Mhm.
know of some very wealthy families that have used the old Austrian foundations for some type of structuring. I think it's sort of seen as a prestigious place, very prestigious place. But yeah, so what's kind of the landscape with crypto then? So is it crypto friendly?
Yeah, let's maybe let's let's shelve this question for the time being, and let me maybe start off a bit about Austria and our wealth management structure, which is the foundation. I mean, people from common law jurisdictions, they have the trusts. In civil law jurisdictions, we are not so familiar with trusts. We are more comfortable with these foundations, and at the end of the day, it's a similar type of purpose that you're trying to that you're trying to pursue. You want some kind of structure where your crypto assets are being held, which is not too close to you, so you don't have any shares or you don't have any kind of interest. And the private foundation is, in comparison to the trust, a quite recent creature. So trusts go back for, I don't know, 1,000 years or so, and or even more than that. Whereas the Austrian Private Foundation was actually established in 1993. And why did we do that? Well, we have we have many neighbors, one of which is Liechtenstein, a small country, which is very well known for its foundations. And there had been sort of somewhat the perception that many wealthy Austrian families are putting their assets, or putting money and funds and so on into these Liechtenstein vehicles. So in order to stop this outflow of funds, the idea was to set up our own homegrown vehicle, but to base it on the Liechtenstein Foundation. So the Austrian Private Foundation was essentially a copy paste exercise of the Liechtenstein Foundation, which goes back to the beginning of the 20th century, so 1920, something like this. And it was quite successful. There were many tax advantages when the private foundation was introduced under actually a socialist, a left-wing party. That was quite interesting at that time. And currently, there are about 3,000 foundations. So most wealthy families have their own private foundation. They often hold the family business. Often the family business is inside a private foundation. There are also foundations with real estate and foundations just with bankable assets. And now we're coming to crypto. So crypto is an absolute newcomer. As in many countries, I would say there's a bit of a tension because these structures, they were set up at the time when Bitcoin did not yet exist. And also they do not provide for any often the deeds of these private foundations do not provide for any more speculative or risky investments. So they're very traditional and oriented towards tangible assets, I would say. And also the boards of these foundations, they are often lawyers who are typically a bit risk averse. So we're not speaking of lawyers like Ross or myself, maybe, but the typical lawyer is very risk averse. And also these boards consist of mostly elderly lawyers who have not had any contact to Bitcoin or other crypto assets. So that is the long-winded answer regarding crypto in Austrian private foundations. So crypto is really a newcomer. It's a new asset class. There are, of course, younger generations which are more close to crypto assets and which are more interested in this topic. And over time, this will become more and more relevant. Currently, I don't think that there's a sizable number of private foundations with crypto assets. But I think the book is an attempt to at least explain the law and to get people interested in holding crypto, not directly, but in a structure.
Yeah. Okay. Well, thanks for that. And I think we'll come on to tax in a minute, because I think that answers a lot of questions around the Austrian Foundation. But do residents use Austrian Foundation, or is it only just people that live in Austria?
Yeah, originally it was only residents actually. So we had all these wealthy entrepreneurial families that are known from the press. They set up their own private foundation. Often it has the name of the family in the name of the foundation. But we have seen in the last few years quite a number of foundations from abroad. Yeah. So I would say that the age of foundations being set up in large numbers is gone. Yeah. So currently we set up foundations from time to time. We sometimes liquidate foundations. In 1993 and these first years, there was a lot of work in setting up foundations. Now it's a bit sort of more it's a bit slower. Growth is slower. I'm personally in the board of director of a few foundations, and all of those are actually non-Austrians. Yeah? So they are from various European countries, and they do very different things. Yeah, holding real estate, for example, or holding bankable assets, holding shares in some business. So all of them have a different kind of setup.
Okay, so
But
some
yeah,
people do. What's the sort of reason that might make a non-resident use an Austrian law structure?
yeah, I mean, it's often tax planning, and it's first of all, Austria is a sort of serious, sophisticated jurisdiction. It's seen as stable. Who knows whether that's true, but at least that's the perception. And there might be some special situations where it really makes sense to put assets into an Austrian private foundation. I think you must also, the listeners must also understand that not every country really, or not every jurisdiction has its own kind of structure. So there are in common law countries, every jurisdiction has a trust, but many civil law jurisdictions have nothing to offer. And so there's a market for vehicles which can hold assets, and sometimes for a person from a civil law country, it's easier to explain a foundation rather than a trust. So a trust is like complicated. You need to get into all sorts of topics about ownership and who is the real owner and what kind of ownership do the beneficiaries have. Whereas private foundation, you can explain it's like a limited liability company, but at the end of the day, there are no shareholders, and that's it. So that's maybe a bit easier to sell. Of course, some jurisdictions have rules which make it prohibitively expensive to use a structure from another country. Yeah? So it might be that if you're a civil law jurisdiction, you have some rules which make it expensive to use trusts, or the other way around. Yeah. Sometimes foreign structures are not well understood. There might not be any guidance. Austria is a small country. We only have 3,000 foundations. So obviously there's not been a lot of case law. One interesting example of case law is a decision by the, I think, Tax Court of Canada, which ruled a few years ago on Austrian private foundations. So for Canadian tax residents, there's a case which explains how these private foundations are to be seen from a Canadian tax perspective. Yeah, so the interest is often tax driven. There are some benefits, there are also disadvantages of the Austrian private foundation. So you really have to look at the very concrete facts and circumstances of a client to see whether this is the best fit.
Okay, excellent. Okay, and so is crypto, while it might be seen as a bit of a risk asset, is it actually classified as property and legally valid under Austrian law?
Yeah, this is of course a question that must come from a common law lawyer as yourself, because we have been discussing and also read that in the many chapters of the book that in the common law area, crypto as property is a big topic, and you can write tomes over tomes on this. In civil law jurisdictions, things are a lot easier. So at least in Austria, there's no doubt that it's an asset. It's something that you can own, where you can have ownership, something that you can transfer to somebody else. And this follows from a very old definition of what an asset is. An asset is everything which is not a person, and everything over which you can have dominion. So crypto is definitely not a person, and you can control it by securing your private keys. So if you hold the private keys, if you do not divulge them, if you do not accidentally leak them, then nobody can touch your crypto assets. Nobody can move the crypto assets that you hold from your address to their address. So the possibility to control is decisive, and that is fulfilled with crypto. There have not been that many cases by courts dealing with crypto. Just a handful, but obviously we are early, and this will come. But in scholarly literature, there's no doubt that crypto is an asset. The same applies to tax. So in tax, it's an asset. It's something that you can buy and sell, and the gain is taxable, and you then have to pay tax on that. Yeah. So obviously, for the tax authorities, for them it's anyway clear this is an asset and leads to taxable income. But even in the civil law area, it's beyond any doubt. Yeah.
Mm-hmm.
Shall we speak about taxation a bit? About taxation?
Yeah, definitely. I think that was our final topic that we have to cover. So yeah, let us know what you think. Is it all tax-free, obviously, in Austria?
Yeah, I mean, we had a system change, and we were possibly one of the few countries, or one of the first countries, that's the correct expression, one of the first countries that introduced specific tax rules on crypto. So previously, the situation was this: due to the wording of the law, if you purchased crypto assets, held them for a year, and then sold them, then this capital gain was tax exempt. It was not taxable. Whereas if you sold within a year, so you purchase something, you purchase Bitcoins and sell the Bitcoins 6 months later. So for these short-term gains, they were taxable at the normal progressive income tax rate, which normally goes up to 50%. Now, with this change in legislation, crypto gains are always taxable, irrespective of the holding period. So you always pay tax on crypto, but the tax rate has gone down. It's a flat rate of 27.5%. So you always, as an individual, you're always taxable on your crypto gains. But, and this is an important caveat, if you exchange crypto against crypto, it's not a taxable transaction. So let's say you take 1,000 euros or dollars or pounds, purchase Bitcoin. The Bitcoin rises in value. You have a latent gain. You exchange the Bitcoin against the appropriate amount of Ether. The Ether then again rises in value, and then you exchange the Ether back into Bitcoin or whatever. So all of these transactions would not give rise to taxable
Oh, that's
income.
interesting. What about would that include a stable coin like USDC or something?
Yeah, good point. A stablecoin is crypto. So basically, you can stay within crypto. You can
Mm.
lock in your gain. So you just exchange your Bitcoin against USDT or USDC or one of these other stable coins, and it's still not a taxable transaction. So that's interesting. What's also interesting is that NFTs are not seen as crypto because of this technical definition that is being used. So if you take 1,000 euros or dollars or pounds, buy Bitcoin and then exchange the Bitcoin, by let's say by Ether, yeah, and exchange the Ether against use the Ether to purchase an NFT, then that will be a taxable transaction. So you would have to pay tax on the gains that you have realized, the gains
Mm.
in the if that you had purchased. So it's really sometimes these tax laws are not
And what you're
they're
saying
not.
here, is this for the foundation tax or is this individuals?
So this is for individuals, but it's basically the same system applies to foundations. The only difference is that foundations don't pay income tax; they pay corporate income tax, and the tax rate is a flat 23%. Yeah, so that would
So
be
an Austrian foundation could almost be like sort of a succession and tax deferral vehicle, maybe for someone in a different country, maybe, right?
yeah. So you could basically use it to grow your crypto pie, to grow your holdings of crypto in a tax deferred manner. So you just stay within crypto. You don't go back into fiat. You can go into a stable coin, which is the same economically as fiat, but technically you would not have a realization event. So
Mm.
as long as you stay within crypto, nothing is taxed. There's also no kind of minimum taxation or wealth taxation at the level of the foundation. So basically, you can leave things in there and they grow. I have, of course, to be transparent and also advise you, Ross, on potential disadvantages of the private foundation. And one is that there is a kind of gift tax. So if you put in assets into a foundation, into a private foundation, there's a 2.5%
Mm.
gift tax. So you will not get the 100% of the assets you transfer to the foundation. Cannot use that and invest it into crypto. You'll have to pay 2.5% tax on that. That is something which is unfortunate and definitely will have to be taken into account. But if you have a long-term horizon, as many crypto people have, if you have a long-term horizon and are basically seeing this as an asset class that is just going to grow and grow, you are not thinking of selling in the near future, then that might be an interesting vehicle. But I mean, the purpose of this book is to show the many jurisdictions that are available, and a client or the advisor of a client just has to go through the pros and cons and has to make up his or her mind which will really be the best one. And maybe it's not Austria, but maybe it's whatever, every jurisdiction.
Okay, cool. Okay. Well, yeah, that's interesting, isn't it? So Austria not ruled out, that's for sure. It could be for certain people, it might be the right choice. So before we wrap the video up, anything else you want to add about crypto and Austria?
No, I think that's it. Otherwise, people would not buy the book. Yeah, we have to.
Yeah, please do
We're
go and
not
buy
going
the
to.
book. It's got a lot of
Yeah,
other information in it as well that you need to know how to hold crypto on these type of structures.
yeah. We will be continuing this series. So the next country. What is the next country on our list?
I think we were going to do a technical topic next, actually, and talk about custody, and then perhaps is it Bahamas after that,
Yeah,
which
yeah.
actually I
That should be
wrote.
the.
So yeah,
Yeah, so Bahamas is the next one.
yeah,
So we're going to go through the whole list. Super.
excellent. All right, Nicholas, I'll chat to you soon. Thanks for that.
Thank you, Ross. Bye, everybody. Bye bye.